I'll start the conversation looking at AI. As you mentioned, one of the key awards for 2025. But there, it seems that we are ending this year with a lot of considerations around stretched AI valuations. Now, perhaps we could be on track to see an IPO early next year. Walk us through your thoughts when it comes to AI at this hour.
So let's look at the question about profitability, because that's what something people are talking about now. Let's look at the price of compute. So if you look at the stats, for 1 million, let's say word when you do the AI LLM calculation, which used to be $37 2 years ago, and now it's few cents. So what we are seeing is we are seeing an acceleration of compute, acceleration of adoption as well. If you look at how much people are using AI, and AI is a generic word, but ChatGPT or everything else that we use, that adoption is going higher. So I believe that, let's say for 2026 or beyond, we are moving from having AI as a co-pilot to a co-worker, as something which will really help you. I use it a lot. Now, the implication for this is productivity. If I ask Sylvia, what would you do if you had 2 extra hours? You had plenty of things that you could do yesterday if you had 2 extra hours. And that, to me, is what people have to think about. So anytime...
But even if people have more free time, doesn't mean they're going to use that in a productive manner.
Well, not all, but
the opposite.
Not all, but I'm sure you and I, we will use, a lot of people will use. If I had extra 2 hours yesterday, I would have gone and watched a movie. I would have spent £20 at Everyman Cinema to watch a movie. That's part of the GDP. So right. What I'm saying is that is productivity. I mean, if you look at emerging market where people don't have good means of communication, you take 4 hours to do a 1-hour job, that's loss of GDP. So this is what AI is going to do. It is going to increase productivity, and that's good for everyone. And I think we are heading into that. And adoption is going high. Enterprise is where a lot of spending is going to happen, which is what I feel very excited about, what Microsoft and others are doing.
Some people, however, have raised concerns around the circularity of the deals that we have witnessed in this space. You had Michael Burry also saying that some of these companies are overestimating the lifespan of chips. Are you looking at that at all in terms of how you're positioning the portfolio when it comes to AI?
So I think everyone should look at, but let's understand. It took flush toilets 75 years to get adopted across the world. Why? Lack of capital, lack of everything. So if things are getting accelerated faster, it's because capital is available. When we had the dot-com boom in 99 and 2000, a lot of cables were laid out, but over 90% of those were never lit. I had never used because we didn't have the internet developed. Now we do have applications. So when somebody is developing an LLM model AI, they're doing it because there's a use case. So the question, those circular financing will remain. I mean, if I'm NVIDIA, if I'm buying stake in every business that is going to buy chip from me, good. I want NVIDIA to do that because I'm a shareholder in NVIDIA. I want NVIDIA to do that. I don't want them to do share buyback and spend money on program that is never going to make them money, which is what a lot of businesses do. So questions are genuine. Companies have to prove it. You have to look at quarter by quarter what they're going to do.
Right.
NVIDIA is going through a next build-up phase with Blackwell, which is exciting. So I feel excited about the stock and excited about the company.
So you own NVIDIA, very clear. How else are you playing the AI narrative at this stage?
So at work, we take a top-down approach to investing. So we are not a stock picker, so we don't do bottom-up analysis. So I use screens. Return on invested capital, free cash flow, those because you cannot understand every business if you have too many stocks to deal with. So you put some filters. So on that basis, I'm excited about all the tech names that I'm looking at. So NVIDIA, Meta, Google, Microsoft. There's one company that it's a small cap, so it's not a big, like InnoData. It's like the back end of what is happening in AI and data. There are lots of companies at the front end, NVIDIA and others, and there are middle layer company and back end which is helping. So this whole AI thing is going to help a lot of businesses. This is like a general purpose application. Think about it like a general purpose application which is now being accepted and used by everyone.
Clarify something for me, if I may. When it comes to the split, how are you playing the AI narrative? Are you perhaps looking to expose yourself more to the smaller mid-cap companies, or are you still very much focused on the big players?
Very much on large cap, because I think smaller mid cap is where you will have multiple gains, but you can have multiple busts as well, because it comes with its own risk. Now, we take a very defensive approach to investing. Our target is to make between 10 to 12% per annum for our clients and using a risk-adjusted basis. So the mid cap and small cap stocks don't just suit that investing style at all. So that could be an add-on in the portfolio to add extra alpha to it, but not the mainstay of the portfolio.
Very clear. Let's talk about Europe as well for a moment. Given that we are approaching the end of the year, it has been quite an interesting one when we think about European equities. What do you like in Europe at this stage?
I mean, very few things. But again, I'm going to use the screen as I mentioned. On that basis, stocks like ASML, ADN, Novo Nordisk, they are screening really well. If you look at Novo, I mean, it has had a bad year. Stock down 45%. I mean, I think personally for my portfolio, I think I picked up 50 and it's down to 47. I believe in this stock. I think that the weight loss pill that they are developing, if that gets approved in the USA, that's going to be a massive thing. So I feel comfortable looking at stocks which are down 45, 47%, which still has a good pipeline of investing and drugs coming up. And by no means the world is cured of everything. I think it's very easy to talk down a large company with a long history and long research history. So because stock is down, I'm not going to buy. So it depends on your investment style. If you're going to look at weekly and monthly return, you're not going to buy anything because everything looks volatile. If you're taking a medium-term view, then you buy something which is 40% cheaper. Makes a lot of sense.
But when you talk about Novo Nordisk, though, they are a company that is very much focused on a key group of disease.
Correct.
So
Yeah.
Are you looking at other European healthcare names as a way to expose yourself a little bit more to the sector?
I mean, Novartis is another one which has a good deal of wider portfolio. So when we do basket of stocks, so let's say I will do a theme. I do a theme of like healthcare stocks. Then I could pick 4 stocks and create a structured note on that to make investment. But again, relying on not necessarily for the stocks to rally. So long the stocks does not fall by a certain limit or stays flat, I still make money. So that is the kind of investment I like to do, which is what most of the investment that we do at Crossbridge.
And I have to ask as well, we are about to start a new year. What do you think will be the main market narratives? What are you looking at in 2026?
See, I would say the new Fed chair is the biggest thing.
Right.
I mean, who will be the new Fed chair is the biggest thing. And Kevin Hassett, well, Polymarket says it's Kevin Hassett, and Polymarket has been right for many things. Kevin Hassett has great advantage. He's worked with the president. He has the trust of the president. So anything that he says becomes the word.
If I may, Manish, Jerome Powell also used to have the trust of Donald Trump when he started his mandate.
Correct. And it's 8 years now, right? So people change and people have, but we are talking about, if you look at the difference in personality between Kevin Hassett and the current Chairman Powell, everything that Kevin Hassett has said is pretty much what President Trump is saying. So you're saying he is his interlocutor in a way, but not in a sense to slavishly do everything President Trump says. No, you have to be an independent Fed chair. But I genuinely believe that rates should be lower. Because if you look at the San Francisco Fed paper that came out, it said the tariff actually brings inflation down. For every 4% increase in tariff, inflation goes down by 2%, unemployment goes up by 1%. So I'm not recommending tariff. It's not a recommendation for tariff. But to think that tariff is going to bring about inflation has been the biggest mistake, I think, what we have seen around in policy making. And I just put it down to there are too many academic people making policy and not business people who are at the receiving end of that policy. If I had a choice, I would reform the FOMC and have half academic and half business people, because the people who are making policy, people who are receiving policy, they need to work together. You cannot sit in isolation and make policies and not understand how it's going to impact the economy.
Well, perhaps in the longer run, a little bit more of a structural change at the Fed. But before I let you go, I just would like to conclude with you highlighting how you think the next Fed chair will be a very important market narrative. But when you think about Europe, what do you think will be dominating the markets here in the new year?
I think it's Germany. Germany is going to dominate the market. I think that the ECB has done its job. Inflation numbers, even though it went slightly up yesterday as we saw, but I think inflation is in control. We have to do basically more spending. And I mean, you can always do supply side reform, even in this country. There's too much of bureaucracy, too many things going on where government is not helping. Taxes coming down, supply side. So across the Europe, you can do a major supply side reform and spending program.
Very clear. Well, let's see and keep an eye on those German defense spending plans. Manish, pleasure speaking with you. Thank you for joining us this morning. Manish Singh, Chief Investment Officer at Crossbridge Capital Group.